And we're live. Happy Wednesday, everyone, and welcome to the Mojo Show, your real estate podcast where we talk about everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're continuing on with our series on your home buying roadmap. Last week, we covered the ins and outs of disclosures, inspections, appraisals, ordering up title and everything. Today we're going to go behind the scenes to that place that many have heard about but never seen, kind of unveil the curtain behind the Wizard of Oz, so to speak, of underwriting as we walk down the yellow brick road to see what Wizard of Oz is doing behind that curtain. But before we get to all of that, of course, a little coffee talk between the Joes this morning. Joe, I understand last weekend, was it last weekend? Your son had the competition, the meet?
Yep. So we had a NASA meet. It's a Natural Athletes Strength something association. So we've been doing those since his, I guess, end of his 8th grade year, beginning of his freshman year. Going to these meets by Big Ape is the powerlifting, person that does all the powerlifting that Hunter's been doing for years. Mm-hmm. And I had a meet since his injury, and I will say he had his personal best in squat, bench press, and deadlift.
Wow.
And it was amazing. He got a grand total of 1,583 pounds because they do kilos. So you got some in there that are, off than what your standard 5-pound increments are.
Yeah.
So they do it all in kilos, and he just a fantastic meet. Over 630-pound squat, 430-pound bench press, and then over right at 520-pound deadlift.
So how much can he bench?
Well, that was his most that he's ever done was 430 pounds because you got to stop on your chest. But they make these shirts, big bench daddies is what they're called, and those things are amazing. They don't help you get it all the way up, but they help you get it off your chest because you have to pause. And it was the best that I've ever seen him do. I was amazed. No matter how well my son does, and I love this, one of the other kids, it's kind of like it's kind of like my bonus kid, I guess you would say. I've known him since he was in the 2nd grade. Dad and I were best friends until his dad just passed away from COVID. Mom, that's where Hunter's living right now while we're in the transition.
Yeah.
And this kid, he's 216 pounds, bench pressed 700 pounds.
No,
he's 750 pounds. This is one of Hunter's best friends. So Hunter had a great meet, and then his buddies just having a fantastic meet too. But they were pumping each other up. It was so good to see, because you're trying to compete, but at the same time you're trying to build up your buddies and things like that. It's a different animal in powerlifting. You're an individual, but you're also part of a team, and you're pushing other people to get better. And that's what I really enjoy about watching what Coach Munns at Big Ape has done with these boys and the girls. It's amazing what he does and how respectful he makes these kids and how they want to help each other get better. And so it was a great meet for all of them. And then another one, Nash Ruley, which I've known also. I coached him in basketball with Hunter, back in the 2nd grade. I got to help him, and he helped out video and some of those things when I was doing things. So just watching these kids now being seniors and the respect they have of a sport, the respect they have of competition, and also the drive. And it's a lot what we have at U Mortgage. These top people, they are pushing other people to be just as successful. Yeah. Well, that's what I saw in this powerlifting meet. So it just really came together on, what he's learning, how he's doing it, and what we are doing here at U Mortgage, NXT Mortgage, about helping each other get better. We don't want to, we don't want just one person to excel. We want everybody to excel, and everybody's got that mindset, and I love that.
So, get better every day.
Yeah. I know this coffee talk was about my kids, and
thanks for taking the whole time there, Joe. Appreciate it.
I'm flying out Friday to go to Nebraska because Anna, my daughter, has her first high school powerlifting meet in Nebraska.
Oh, sweet.
And theirs is different because they do know you don't put any equipment on, so you're just raw. You get knee sleeves, but you don't have a suit and all the other things. So it'll be interesting to watch her in that one. I'm excited to be up there, but that one I'm more just a spectator. I'm going to sit back. I'm going to get to relax. I don't know if I will relax, but I will try.
So question for you, because both you and I, and I know we're probably taking a little bit longer on the coffee talk, but that's okay. because I'm super excited about the guest we have on. I can't wait to introduce her and stuff. But let me ask you something, because you and I both have 2 children, son and daughter, right? Son is the eldest sibling, daughter is the youngest, and that. So between the 2 of them, the son and the daughter, which one probably gets away with more with dad?
God, you're gonna put me on the spot. Wow. I love my daughter. I love my daughter, but she is a sweet soul, and I need her to toughen up some. So I probably let my son get away with more because he's like dad. He's got a good head on his shoulders. He tries to hide things, and I bust him on him all the time. So now he's just come clean with me for everything.
Yeah.
So I think he probably gets away with a little bit more just because that's my girl. That's my baby girl. And I have to, and if she hears me just say baby girl, she's going to kill me because she hates it when I say it like that. But yeah, so I would say my son probably gets away with more, but my daughter, she gets more of the money if she wants it. So,
okay. Yeah. That's
so what about you?
I have to say my daughter does. She does. She gets away with. I mean, my son is 30, right? So as far as getting away with things at this age, it's not. I mean, he's his own adult, right? But I will admit, when he was growing up and stuff, majority, because there's like a 12-year difference between the 2 of them.
Oh, okay. Yeah.
So yeah, he got away with some things. He definitely did. But with him, I always told the line with him. And with her, it's just a different relationship, with a dad between a son and a daughter. It just is. I mean, she's your baby girl, right? I mean, my daughter, she's my princess, and she always will be. I don't care what age she's at. She's my princess, so it's interesting. And, we really try to protect the daughter, I think, a lot more than the son.
Yeah, and it hurt me when my daughter, and I know our guest speaker is going to laugh at this, hurt me when my daughter goes, Dad, I want to find a guy just like you. And in my mind, I'm like, no, you don't. No, you don't. I know what I did. No, you don't.
No, you don't. No, you can do better. Trust me.
Yeah, that's exactly what I said. Right? You can do a lot better than me. So yep, that's my mentality with my daughter. So.
Well, I know we just took up probably about half the show with coffee talk, but
we'll get through it. We'll be a little late.
Well,
it's our show. We can do what we want.
That's true. Well, yeah, we'll probably extend it a little bit longer. I definitely want to introduce our guest, get her on here. I'm sure she probably has some comments on this as well, perhaps, but I'm super excited. She's currently a learning and enablement specialist, helping to create training content, and she's a former senior underwriter who also used to train underwriters. So we're getting a really behind the scenes look from the pro herself. So please welcome to the show, everyone, Cherie Rosnick.
That was such a sweet intro. And by the way, the whole I am the baby of the family. So I have 2 older sisters, and the whole comment, Joe, on like, oh, your daughter wants to find a husband like you. I think I did the same thing. My dad actually, I think, loves my husband more than he loves me.
Yeah.
So I feel you on that.
But I bet you it took a while for your husband to get into that spot with your dad.
This is true.
Yeah.
We've been together for 11 years now, but he sometimes, my dad will sometimes call my cell phone and say, hey, can I talk to Kim? And I'm like, wow, okay. No, hello, daughter, sweet baby.
Right.
No, okay.
It's kind of like that reel out there that my husband's happier to see my dad, and her husband's pulling in the driveway, and the dad runs out and knocks her over, and then he falls down. That's what I'm picturing.
Yeah, I'm pretty sure that's my dad. I think he's listening right now too. So
that's funny. That's awesome. Well, for all of our listeners, before we get into this, please ask questions, put in a comment. Cherie is going to be able to answer those or help us answer them. I want to start off with, we would love for you to tell a little bit about yourself to the listeners before we get into it. So tell our listeners a little bit about yourself.
Absolutely. So I actually started off my career as a middle school teacher. So I taught 12 and 13-year-old little preteens, which I absolutely loved. But as you can imagine, that was a lot. And if you are a teacher or know anybody who has been a teacher, I was barely making enough for the gas to get to my school. So it's actually, my husband had ended up getting in the mortgage industry. And so that's when I got in the mortgage industry. And this is so strange, but I fell in love with it. Like, who loves mortgages? I do. I just really enjoy it. Yeah, it's such like, I feel like such a nerd when I say it, but I started off with training on the retail side, and I was training LOs. And then I had moved over to the underwriting side, and I was underwriting, but then also training underwriters. And then I had moved over to a role where I was training, like, very publicly. I was training 100 people a week. This was at UWM, United Wholesale Mortgage, where I was just had people training. And I am like super passionate about like helping people. This is such a huge decision in your life, and this is such a huge thing, and you just don't know anything about it. And I just love being able to help other people to get into homes. It's a lot of fun for me.
Yeah. Well, you mentioned a great partner of ours, UWM. So,
yeah.
You know, they do a great job with training people and, you know, being one of the support people that trained a lot of the underwriters, you know, so having you on the show, thank you again for coming on. But can you describe to our listeners, what does an underwriter do?
Absolutely. So sometimes a lot of people or sometimes people think of the underwriters as kind of the bad guy. They're like they're the ones that told you no, that you can't do it. But really what their main job is if I were to put it in just like simply 2 words, is to assess risk. And that's on 2 sides too. So they're assessing the risk of the loan for the lender who's giving you the money, but then also they are assessing the risk for you as a borrower to make sure that you can actually afford this home. And that's what I always focus on, is that, yeah, you might think like, oh my gosh, this house is beautiful, I want it, I think I can afford it, and for sure I want to get in it. And then what the worst case scenario would be is that, ooh, this is actually more than I thought it was going to be per month. Like, this is a lot. I didn't even think about like maybe utilities and heating the place and doing all of that. And then you end up defaulting on it. And that would be absolutely terrible. So I always think as an underwriter is that kind of stop, and they're helping you to make sure that you can actually afford this home and be able to pay for it monthly with being able to do other things.
Yeah. And, you know, from an underwriting standpoint, and from a client standpoint, they need to understand is, you know, we all want to be able to buy the biggest things, the best things, the most beautiful things. But, you know, we don't have that parent anymore that's trying to teach you how to budget or how to say, okay, hey, you have $500, you know, in your account. Spending 490 of it on this one thing is probably not the smartest part, right? Mm-hmm. So I look at underwriting, but doing the same thing. You make this an income, you know, based on an average in a way, versus, hey, I know I have $5,000 a month coming in. I can afford a $3,500 mortgage payment. You know, that underwriter's there to say, okay, well, what happens if this overtime doesn't happen? What happens if this bonus doesn't come in the same way? You know, yes, we want those things, but to be having somebody that's looking out for our protection. And I don't think I've ever said it that way to a client. And you kind of brought it to light, is you're there to help also make sure they can afford.
Mm-hmm. Absolutely.
And yeah. I think that's a great thing. So when you're looking at that affordability, what are some of the things that, you know, when you're in your mind, what are some of the things that you just high points that you look at to be able to make that decision, I guess?
So in underwriting, we use an acronym called IPAC, IPAC. So we are looking at your income, the property that you're purchasing, or potentially refinancing, your assets, and your credit. And those are just those are the buckets that we're in. And it's not that you have to be strong in all 4 necessarily, but if you're a little bit weaker in one, then you need to be a little bit stronger in another one. So we're taking a look at like what's coming in, what income you're making, and then versus your liability. So what kind of things you're already spending on? Do you have cars? Do you have credit cards? Do you have all of that? What kind of money you have saved up? So that's your asset piece, as well as potentially we might look at like, hey, if you're a little bit riskier in one of these categories, like, hey, maybe your credit score is not that great. that might be okay, but we might say, hey, we need you to have a little bit more in your bank account to make sure that if something happens down the road, whatever that may be, we have what we call reserves. You have a little bit of money in your bank account and you're still able to make that mortgage payment there. So again, it's IPAC, so income, property, assets, and credit. And then we kind of want a balance of those. If one's a little bit weaker, then we want another bucket to be a little bit stronger.
Nice. Okay. And again, everyone, if you have comments or questions, please drop them below. We would love to be able to get them answered while we have Cherie on the show right now, especially with her expertise and background experience. I mean, she's the one to ask all these questions to, so please post them below. Cherie, when you talk about these different things that you're trying to get approved, and that's as far as the assets, the property, income, and credit. So I know a lot of people, as they're going through their loan in underwriting, we have to ask for additional documents. I mean, we Joe and I, we get documents, probably about 90% of what's needed for the underwriter up front when we get them pre-approved. But then there's always documents afterwards in underwriting. And that tends to be, of course, a nuisance for a lot of borrowers, right? Going back to them, hey, we need this document. But what are we really trying to do in getting those additional documents?
So again, it goes back to my original point of like, we're just trying to make sure that you can afford this. Now, like you said, most of the time you're able to, what documents you need to get. So you're able to let your borrowers know like, hey, yeah, we need this, this, and this. But sometimes things come up. Sometimes underwriters just see extra things that may cause extra risk that they might ask for. I know it's a pain in the butt. I went through this process myself. We recently bought a home as well. I know it's a pain in the butt to get all of these documents there, but again, it's just proving to your underwriter and making sure that you can actually afford this. And it is just that extra kind of like, hey, yeah, for sure, I am going to be getting that bonus for the foreseeable future. I've been getting it. Or, hey, yeah, I do have enough money to afford this. So yeah, there's going to be little pieces, but you got to think about it like this too. You're asking somebody to give you hundreds of thousands of dollars. If somebody asked you, so somebody said, hey, can I borrow $500,000 from you? You'd probably want to make sure that they'd be able to pay it back, right? So giving you a couple extra pieces of paper would not be that big of a deal.
So we just had, actually, Joe and I, we were, there's a client of mine, give you an example, right? That we had to go back and ask for additional documents. We provided pay stubs, we provided W-2s to be able to show, how much he makes each year. Now he's a pilot, right? He's a pilot for an air. So, and this happens for like nurses as well in the medical field. The way they get paid is different. It's not a straight, this is what you get per hour, or a straight salary, their hours are different and stuff. So we ended up having to get his last pay stub of the year, end of year pay stub, for, let's say, the last 2 years. What would be the purpose, so that our audience, those out there that are looking to buy a home, why would they need something like that? The end of the year pay stubs beyond the W-2s and pay stubs, the current pay stub.
Yeah, that's a really great question. And so from an underwriting perspective, we categorize that. We call it what's called variable. Well, like you said, it's not like, hey, I get a salary and I make a set amount every single year, and that's basically kind of guaranteed. When you have somebody like a nurse or potentially a pilot, or something like nurses is a huge one, you work, sometimes you have a week where you work 25 hours, sometimes you work 40, sometimes you work 60. And so you're kind of varying on that. And so you're not taking home the same amount of money every single week or every single pay period. And what we want to make sure as an underwriter, and so what we do is we kind of average that income. And the reasoning why behind that is because we want to make sure that you can afford, your mortgage is going to be due on the first of the month every single month, whether you had a good month where you got to work a lot, or you had a bad month where you weren't getting enough, you weren't getting a lot of overtime, or something happened or whatever, you got sick or whatever that was, and you weren't getting the overtime. So we want to make sure that you can afford your mortgage in both the high months and the low months. So we're taking an average of that kind of income. When you're not getting the exact same amount, we're averaging it over a time period, usually at least a year, to make sure that, yes, on average, you're making enough to be able to afford your monthly payment.
Yeah, and I think that's where the loan originator has to do their part when they're setting up at a pre-approval. Have those harder conversations, because it makes your file a lot easier. Because if I put a contract in and that debt to income ratio is right at that top mark on a conventional at 50, am I doing the right thing for that client? Are there other things? But also there might be a story there. And I know some underwriters, and you've helped me through some of that, is if we're doing that, is there other income that we're not using? An ongoing spouse that has income, she's just not on the loan, or he's not on the loan. It doesn't always help in the decision, but it does help that underwriter make a little bit more of a feel-good decision, in my opinion.
Yeah. I'm a little bit more comfortable if, like, your base, we're kind of pushing it a little bit, and your regular income is up there, but like you make overtime and we're not using that. I'm like, I feel pretty comfortable that you should be able to do that. Absolutely.
Well, and one of the things that, I think our clients don't always understand is, well, I got raises since 2 years ago. Why are you using that income from that time to average in? And, I always tell them, I'm like, well, if we use an average, it's based on the hours that you're working. So you're actually going to be in a better comfort level on your budget if we're using that lower income. But sometimes you have to squeeze a little bit. And I know we've had to use all right, let's think of this in a different way kind of attitude. But, I want to just always tell people, if you're a first-time home buyer, make sure you stay in that comfort zone of the budget. Don't try to go over it. You would rather settle on a house, for a couple of years because it's your first house, versus settling on, bad credit for a while because you couldn't afford that payment when you had the down month if you're variable income. So that's a great point out there. We did have a comment, Joe, and we need to share this comment,
by the way.
I don't know if you know this person, but let the record show. I do love my daughter. Kim, her husband, has held my precious gift better than I.
See, he's saying that public. He's got to say it publicly, but you can see he had a shout out to my husband too.
I saw that too. I saw that shout out to the husband. Well, thank you very much, William, for listening in. And Sheree, it's the other things that we need to find out are, what are some of the most common mistakes that people buying a house make when it comes to an underwriter and looking at things? What are some of those common mistakes that you see?
Yeah. So there's two things that I see. One would be so we talked about this a little bit earlier about there might be additional documents that we need. And one of the big ones with that is just kind of dragging your feet on getting them. It's like, I get that you're busy and you're like, I can throw that off. It's no big deal. We're not closing for another 7 days or however long it is. But realistically, you got to think about it. We've got to be able to get that document. We've got to be able to send it to underwriting. Underwriting needs time to review it. And then hopefully there won't be anything else additional, but there could potentially be additional. And then we're potentially pushing our closing back. So it really should be treated like an urgent. And I know you guys set this up when you talk to your borrowers and whatnot, but it really should be something urgent that you get in as soon as possible. Because pushing back closing, even by a day, can be problematic to your loan. It could cost you more. It could, we've got rate locks to think about, stuff like that. So really getting that document in quickly. And then the second thing, and this is probably the biggest one, and I know you guys have probably experienced this as well, is just not listening to your loan officer, listening to your partners. I know you guys do this, and what you're going to say, like at the beginning of the transaction, you're going to give you guys probably have a list of 4 or 5 things of don't do these things.
Yes.
Right?
Don't open new credit. Don't go buy a car.
Don't get a new job.
Yes. Don't do these things. we're serious about that. We
Yes.
really want you to get this house, and we are not. I know that it's tempting, especially when we're purchasing a new home. You're excited. You want to go get that new couch. You want to get new decorate. Like I know I've done it. I was tempted to do it myself. My own. I was like, oh, gotta wait. If you're opening that new credit, if you're like driving down the road and you're like, oh my gosh, I need that new truck. It's so beautiful. It's a great price. I need it right now. You better ask yourself, do you need that truck or do you need that house? Because you might not be able to have both. If you open that during process, it really messes up. Not only will it mess up potentially that debt to income ratio that you have, but it could potentially push back closing like we were just talking about, and all of those things. I've had people do all of the things. I've had them quit their job and be like, oh no, I'm just not going to work for a little while. And I'm like, oh, friend, how did you think that you were going to pay for your mortgage? Or like get that new truck, or I've had it from A to Z. Please listen to your loan officer. And if you have any doubts about it, just call them. They'll tell you whether to do it or not.
Put it this way, that new truck or that new car that you want to buy and this house, which one do you want to live in?
Yeah.
Right. Exactly.
I mean, it might be a 4-door, but it ain't comfortable to sleep 4 people.
Right.
So,
well, Joe, what's the worst one that you've had that someone has gone out and done one of these that we preach about of not doing? What's the worst one?
So, best friend, 2 days before closing, bought a new Suburban. 2 days before closing. We were already final cleared to close. And all of a sudden I get a phone call from the back office. Hey, we just did a refresh on credit and there's an inquiry for a new car. A bunch of credit pulls. So I had to call him up. Found out, hey, yeah, I bought a new car. It's like, you remember that thing I said don't do? 2 days before closing, I still pulled off closing that same time because we got the information, found the trade, all that stuff. The real estate agent never sent me another deal, and she's a friend of mine too. I still pulled off the closing at the same time. I don't understand why I didn't get another loan from her.
That's impressive.
So
that's really impressive.
It was not an easy feat to get done. Andy's a cop, so you have the income that's variable and everything else because of shifts. He's a great guy, great friend of mine still. But that was the one that I was like, really, 2 days before closing, and you're a buddy. So Joe, what was yours?
So I've had two that one was the guy went out and bought a boat. The other is that she changed jobs, and it was a mess changing the job. We weren't able to close the loan.
Yeah, changing a job is the most difficult because you got to wait for either the offer letter, right, Sheree, or you have to get a new pay stub because depending on the loan, can't close without a pay stub. And investors now with the way the market was and being tighter, they're not going to make those exceptions like we were probably in 2020, 2021 because heck, let's just throw loans all over the place because rates were good and everybody was trying to get them. They're gonna be like, we need to wait for that pay stub, or we got to wait for that drug test to come back because you're contingent on that happening.
Yep.
All these things.
I always say we don't close loans on pinky promises anymore. We used to. We used to close loans on pinky promises back pre-2008. That was.
But I will say, common sense underwriting's coming back around on some things. There's a lot of things when it comes to self-employment. There's a lot of things and I've had underwriters actually talk out and look at the guideline, but think common sense wise too. So I really want to say thank you to the underwriters that have brought common sense back, because there was when TRID came out and when all that stuff came out, everybody was worried about licenses and everything else. And I found out that licenses now for underwriters are not held as individuals. You still have your license, but the company has to sponsor it. So it's different now on the way that you can get, your license is at jeopardy. It's more on the company now than the individual, which is, I think, what brought back some of the common sense underwriting too. So that's been a good thing. But you mentioned something earlier about, not waiting on the document last minute. The one thing is people need to understand it's not the underwriter that added conditions a lot of times. It's that document came in and there's questions on that document. One for particular is homeowners insurance. Well, if you wait until the last minute to get a quote on the homeowner's insurance and it doesn't have enough replacement cost in it, well, guess what? Now we have to get more documentation or have it changed. So like what you said is don't wait until the last minute, because those are things that can add conditions at the end when you're going in for final if they haven't seen that document in the first place. Or if you need an updated asset statement. Well, if there's transfers from this account to that account, now we're having to get the documents to update that. So it's not an underwriter, and everybody has that, oh, the underwriter's out to kill this deal. It's the documentation that is adding these things. It's not the underwriter going back and trying to find something different. A lot of times from what I see.
Absolutely.
Yeah.
That's 100% correct. And you mentioned homeowners insurance. That's a great example, because not only is that a document that we need to get, but it also has third-party involvement now. So now we're also not only relying on you, but you need to rely on your company too, on how fast that they may get back to you.
Yeah. Now, what is the, Joe and I shared, but I know we're running out of time, but I want you to share, what is the craziest thing that you've seen happen at the end of a loan that caused it to just.
So that truck story is a true story. Somebody, he was driving down the street, saw a truck on the side of the road and was like, this is a beautiful, gorgeous truck. I need to have it. And that was, I don't remember specifically how many days before closing, but it was a couple of days before. And it did kill the deal, at least for then. So that one was a true one.
So listen to your loan originator, and if they're not saying it, I'll say it right now. Don't run up your credit cards. Don't open up that new department store. I know it's Christmas time, but if you're buying a house, that 15%, 20% off that item, not going to help you as much as the house will.
No.
Yes, especially during Christmas time. It is not worth the Amazon credit card.
Yeah. Wait for the keys before you go buy furniture or appliances.
Yeah.
Once you have the keys in your hand, go do what you want to do. So
if there's any realtors or loan officers on listening right now, give me a thumbs up or a heart or something that this has happened to you on one of your closings. Please drop it in there. I would love to see how many people this has actually happened to. I know it's happened to the three of us. Obviously it has. We've got, we can sit and tell war stories all day.
I think if you've been in the industry for longer than maybe like a month, then you have been personally victimized by somebody purchasing a new vehicle.
Yeah, I was going to say, if you've done more than 10 deals in your lifetime, you've hit one of these problems.
Hit you. Definitely. Well, listen, thank you so much, Cherie, for coming on our show today. It was awesome. Great information. Really appreciate you coming on today, taking time out of your day for this and helping to educate, all of our listeners and behind the scenes, looking at underwriting, what it's like for everyone, so that's not such a mystery to everyone. So really appreciate it. If you have any additional questions for Joe or I, you want to get in touch with us to chat further about the process in buying a home, you can definitely reach out to us at either our podcast email there, the Mojo Show podcast @gmail.com, or you can hit us up individually, jbartram@umortgage.com or jreams@umortgage.com. We'd be more than happy to answer any of your questions or certain scenario that you have currently right now. Or what if I did this? Is this going to hurt me purchasing a home that I want to next year, right? More than happy to walk through that with you. Next week, we're going to continue on with our series. It'll actually be part 5 of our 6-part series. So be sure to tune in next week as we continue on with this, as we dive into getting your loan to clear to close, right? CTC, as we call it, or clear to close. And what happens after that when we do get it clear to close. So be sure to tune in next week at our usual time, Wednesday, 9 a.m. Central Time. I have to put that in there for you, Cherie.
I appreciate that. Yes,
Sorry.
thank you.
I had to throw that in there for you. But I do want to thank everyone for listening in, comments, likes, everything. Really appreciate everyone. If you only caught part of the show or just this episode, because this is part 4 in the 6-part series, go to our YouTube channel. You'll be able to check out the other parts of this series as well as other shows. You can hit us there on our YouTube channel at the Mojo Show Real Estate Podcast. While you're there, be sure and hit the subscribe button, because we are on a mission to get to 1,000 subscribers. Before we close things out, though, Joe, any last words or nuggets of advice for our listeners?
Just want to say thank you to Sheree. Answering questions at night, guys. We can't do this without a support system, and you've been an awesome support. Thank you for answering my questions when I ping you, and thank you for coming on our show. We really appreciate you.
Thank you for having me. This was fun. I enjoyed doing it.
Well, I'm Joe Mortgage, and that handsome guy with the beard is Cup of Joe Mortgage, and we'll see you next week.
Myth